Welcome back to Beyond Binary, where we decode the complex systems shaping our world, from artificial intelligence to global economics. Today, we're exploring a question that's making headlines and worrying analysts around the world. Are we headed for another financial crash? The G20's recent warning has reignited fears of a possible global downturn, one that could mirror or even surpass the economic shocks of the past decades. But to understand where we're going, we first need to understand where we've been and what exactly a shutdown means in the financial world. Let's rewind a bit. The last major global financial disruption was more than a decade ago, the Great Shutdown of 2020-2021, triggered by the COVID-19 pandemic. It wasn't just a health crisis, it was an economic earthquake. Entire industries froze overnight. Airlines grounded fleets. Supply chains broke down. Millions lost jobs within weeks. For the first time in history, nearly every country in the world slowed its economy simultaneously. Governments responded with massive stimulus packages, trillions of dollars printed and distributed to keep people and businesses afloat. It worked, temporarily. The shutdown exposed how fragile our global financial system really was, how deeply everything was interconnected, from stock markets in New York to manufacturing units in Shenzhen. Fast forward to today, 2025. The global economy has recovered on paper, markets are up, inflation has cooled slightly, and unemployment numbers look better. But beneath the surface, something feels eerily familiar. So what exactly is a shutdown? In simple terms, a shutdown occurs when a government temporarily halts non-essential operations, usually because lawmakers can't agree on how to fund them. It means government agencies close, federal workers go unpaid, and public services stall. Think of it like your home budget. If the people managing the money can't agree on what bills to pay, everything stops, except the absolute necessities. Shutdowns might sound political, but their effects ripple across the entire economy. They erode confidence in markets, delay crucial projects, and shake investor trust. When the United States, the largest economy in the world, faces a shutdown, the consequences aren't local. They echo globally. The last U.S. government shutdown in 2023 cost billions of dollars per week and delayed everything from passport renewals to small business loans. But this time, experts fear something much larger could be brewing. A systemic slowdown, not just a political standoff. Now enter the G20, the world's most powerful economic group, representing around 85% of global GDP. In their latest 2025 summit communiqué, they issued a stark warning. That may sound like bureaucratic jargon, but let's decode it. Sovereign debt refers to the money countries owe, often to other countries or international institutions. During the pandemic shutdowns, governments borrowed record-breaking amounts to support their economies. The problem? Those loans are now coming due. As interest rates rise to combat inflation, countries are finding it harder and more expensive to repay their debts. Some developing nations are already on the brink of default. Digital markets, the backbone of modern finance, have also become a double-edged sword. Crypto booms and collapses, algorithmic trading, and AI-powered speculation have made markets more volatile than ever. One wrong data feed, one misaligned model, and billions can evaporate in seconds. And then there's geopolitical fragmentation, the polite way of saying that the world is becoming more divided. Trade wars, sanctions, and rival financial alliances are replacing global cooperation. When superpowers stop trusting each other, the systems that keep money flowing, like international banks, supply chains, and digital payment networks, begin to strain. So, could all this actually trigger another crash? Possibly. And here's why economists are nervous. Unlike in 2008, where the crash began in housing, or 2020, when it began in health, this time the risks are everywhere at once. Energy prices are unstable due to ongoing conflicts in Eastern Europe and the Middle East. AI-driven stock trading systems react faster than humans, amplifying panic instead of calming it. And central banks are stuck in a delicate balancing act: raise interest rates too high, and they risk recession; keep them too low, and inflation returns. In short, we're walking a financial tightrope, and the wind is picking up. Let's look back briefly at the last financial crash of 2008 to understand how these cycles unfold. Back then, it was subprime mortgages, risky home loans bundled into safe investments, that caused the meltdown. When those loans defaulted, major banks collapsed, credit froze, and trillions in global wealth vanished almost overnight. Governments had to bail out financial institutions to prevent a total collapse, and ordinary people paid the price through job losses and austerity. Now compare that to today. Instead of bad mortgages, we have bad data. AI models making decisions based on incomplete or manipulated information. Instead of banks being too big to fail, we have tech giants controlling digital currencies, payment gateways, and even lending platforms. The threat isn't just financial, it's technological. One area of major concern right now is national debt ceilings, especially in the US, Japan, and parts of Europe. When governments approach their borrowing limits, they risk defaulting, meaning they can't pay their own bills. That triggers market panic, downgrades in credit ratings, and capital flight as investors move money to safer havens. And here's where things get tricky. AI and algorithmic trading systems now control a huge portion of global market activity. If panic sets in, machines can trigger automated sell-offs faster than any human intervention can stop. A crash that once took weeks to unfold could now happen in minutes. But not everything is doom and gloom. The G20 isn't just warning, they're also proposing preventive measures. Countries are being urged to build digital regulatory frameworks, improve debt transparency, and invest in AI oversight systems that monitor financial anomalies in real time. Think of it as giving the global economy a smart shield, using AI to detect and prevent financial contagion before it spreads. The idea is that technology, which once accelerated crises, could now be used to contain them. AI-driven risk analysis tools can forecast market vulnerabilities months in advance. Quantum computing, still in its infancy, could eventually simulate global financial flows to identify weak points before they break. However, technology can't solve everything. If there's one lesson from every past crash, it's this: markets are built on trust. When people lose confidence in banks, in governments, or in the system itself, that's when collapse happens. The G20's warning is less about numbers and more about psychology. It's a reminder that stability isn't just about money, it's about belief. So, are we truly headed for another financial crash? It depends on how we respond in the next few months. If global powers cooperate, if AI is used responsibly, and if policymakers act before panic sets in, the crisis can be avoided, or at least softened. But if indecision, political polarization, and digital volatility continue to grow unchecked, we could be facing a 21st century version of the Great Depression. This time, powered by algorithms instead of banks. In the end, the question isn't just whether the economy will crash, it's whether we've learned from the last one. Because every shutdown, every crisis, every warning from the G20 echoes the same truth. A system built on imbalance will always seek equilibrium one way or another. So as we move forward into 2025 and beyond, perhaps the best we can do is stay informed, stay critical, and never underestimate the invisible codes running our world's economy. Thanks for watching Beyond Binary. If you found this video insightful, make sure to like, share, and subscribe for more deep dives into the systems that shape our lives, where technology meets truth, and the world isn't just black or white, it's beyond binary.